What's going on, everyone? And welcome back to the Modern Day Trader channel. This is weekly review number 10. We made it number 10. Look, it's a bit of a milestone. But yeah, look, it hasn't been 10 consistent weeks because we obviously take breaks here and there. But we've gotten to number 10. So there's, I think, a good element of consistency that we bring to these. And yeah, here's to 10 times more going forward. So cool. Week 10 of the weekly reviews. Two trades taken this week, all on pound JPY, both short, both losses. Yeah, something in there that I just want to highlight as I take you guys through those two trades. Something that I think I missed, having not zoomed out how the weekly was forming, but something that I've noticed that I think is going to be massive for the coming week. And this is something I'm seeing across all pairs. So I think this episode is going to be very technically focused, just so that I think there's a lot of opportunity lining up for this coming week and the following. So I think pretty much just for the rest of May, some very nice opportunities shaping up that I just want to take you guys through so that none of us miss anything. So yeah, two trades on GJ. Let's just have a look at those. So yeah, weekly return, essentially minus 1%. Both of those were 0.5 risk. So that brings our, I guess, month to date return to negative 0.43. So we did start the week, the month rather with a W. So yeah, just maybe looking at trades themselves, and then I'll come back to this, but you can just see basically relative to where we are or relative to the 4 hour where these trades are kind of taken. The first one around that point and the second one there, but just looking at the lower time frame structure, this was the first trade. It was a 15-minute POI. This one's pretty clean. I'm not mad at this. I think even looking once price came into the POI, just what I look for on those micro time frames were two sort of 10-minute projections from the extreme highs, and yeah, this one just unfortunately just didn't work out. All criteria was met. I'll explain just why I just think it still wasn't a great trade, but on paper it met the plan, just did not work out. And then the second trade, not happy with this. This was actually marked as an invalid trade from the POI on the 30-minute, just being incorrectly plotted to the actual entry criteria here. This break of structure that I look for needs to have high momentum, and that's actually something that I go through in my pre-trade checklist. Did the trade have, or did the break of structure, the structure break with the price break structure with high momentum? And to be honest, I probably just lied to myself in the moment and said that this did have high momentum, but there's not a lot of momentum, even when you're looking at it now. And that's something I only really learned or took note of in hindsight when I was doing my advanced soft review, that we could not break the structure with high momentum. It was a very low momentum break. And yeah, force this position. Look, on another day, it might have worked. I'm glad it didn't, because it made me look at the position in a bit more detail. And yeah, this eventually just stopped. And I think regardless of, this was obviously an invalid trade, just kind of toss it because it should have never happened, but this met the plan, but kind of still didn't work out. I think just looking at pound JPY, I was really trying to force these short positions. You can see the first trade, there was a minor pullback. This is where structure shifted on that minute 15, looking to take that to the downside, stop me out. And then I was still in this frame of mind of, okay, price is going to form this deeper correction. So if we look at the higher time frames, this is bullish, and it has been bullish. And I think there's, as much as we know the market moves in cycles, impulse corrective, impulse correction. The hardest thing is obviously trying to time when that's going to happen. Hence, my strategy ideally just focuses on what's happening now, trade the market, as it's playing out, instead of trying to predict what it's going to do. And it was my biggest mistake this week. As much as it was a week where there was a bit of a correction, it wasn't as much of a correction as I was anticipating before price just continued to the upside. And so I think I got very caught up in trying to catch the correction because I anticipated it to be deeper than it was. And as a result, just got stopped out multiple times. So, but zooming out and looking at how structure was reforming, I just realized that, I just was not paying attention to what the market was actually doing and focused more on, I guess, what I predicted it to do, or, what I hoped it would do, which was, kind of to set me up for failure from the beginning. So those are the two trades. We are kind of at this halfway point of the month. This is what the equity curve is looking like. So kind of just to recap, first half of May, we've got 3 trades, 1 win, 2 losses. From a buyer's perspective, so trading in the line, high time frame or not, 1 pro trend trade, 2 counter trend trades. The pro trend trade was my only win, and then 2 counter trend trades were my 2 losses. So all 3 of these trades were taken on pound JPY. So it's kind of just helped me looking at, or when I'm analyzing sort of the, what can I call it, the accuracy of kind of just like the small detail that I look at. I can look at it, relative to one pair, which is kind of helping in, me reflecting over what's worked, what hasn't worked over the first half of this month. And just looking at it when I was trading in alignment with the major trend, the daily time frame, that was where my only win came. 2 positions I took counter to what the higher time frame was doing, what structure was doing. I took a loss. That's obviously evident. 1 long, 2 short, 1 win, 2 losses, 1 invalid position. And then see all of that comes to where we're sitting on, in terms of return, monthly return of minus 0.43, which isn't terrible. You can see that here it's minus 0.86R. This is just if I was trading 1:1 risk to reward. Look, not terrible for May, but I think a lot of opportunities. So looking forward to how that's going to play out. On the FTMO account, you can see same account, started 10 November 2023. All the details are the same here, just for all that transparency. Current equity, $9,423.30. You can see these are in 2 trades that I took this week, taking a total of 32 trades so far on this account. And kind of like the starting date return on this, minus 5.76%. So about halfway through the maximum permitted drawdown. Currently still taking trades at 0.5% risk. Once I do get to a 7% drawdown, then that goes down to 0.25. But we're not there yet. We've still got a couple of trades before we do get there, about 3. So let's just keep it going and see how we do. But just coming back to the charts, just because I did mention that there's something interesting that I'm seeing that could be quite interesting for how the rest of the month plays out. You guys obviously know that I'm trying to incorporate quarterly theory into the way I trade, and quarterly theory is obviously quite detailed. If you haven't seen the video by Trade a Day, where it's literally a 10-minute video and he explains it very black and white. There's it at the beginning of the video, very boring. He's not going through example or anything like that. It's literally just what theory is. and it's an adaptation of some concepts from ICT, but has been, verified as, literally it's what they look at, but obviously put together in a very, concise, that's the word I'm looking for, way that had never been sort of communicated in that way. So he's kind of just helped traders understand how the market moves in cycles over certain periods of time. And I'm not going to, explain the details of it here, but what I essentially look for is an accumulation, manipulation, a distribution. And that sort of informs me in terms of how I should look to position myself. But obviously, coupled with my strategy, it gives a good indication of entry timing. And when I look at that cycle, I'm obviously still bullish on dollar index. You can see price still forming high highs, high lows, high highs. We broke this external orange liquidity, have been correcting, and we've targeted and now completed that internal range liquidity, which I think we are respecting now. I think Friday, or at least this week, was going to determine whether we were going to break that and continue lower, or, potentially respect it and continue to the upside. At the moment, we're respecting it. I like the price action that we formed at the bottom here. That's the move to the upside. But what I like even more is the timing of how this is all happening. The start of the month, we had very low momentum. That was the situation. We saw very little movement. This past week has been very high momentum down into that internal fair value, and we've respected it. And I've defined that now as the manipulation that comes after that accumulation, taking out the orders, whatever you want to call it. Area here, daily structure before we continue to the upside. And so what I'm seeing play out for the rest of the month is this distribution higher that I've sort of noted here. And while it's good to forecast that, I think based on how this kind of the weeks kind of played out, I'm trying to be careful to wait for structure to almost confirm it. Because at the moment, from the 4 hour, I think right down to the 1 hour, we are still bearish. You can see protected highs way up here, but we have started correcting, and it may not be a clear cut correction and break frost level, and because technically once we break here is when we, so at least for me, when I confirm that structure shift from that high time frame perspective, we could come lower for the week, form a new lower, and then break this new high. That could happen too. You could correct higher, mitigate that POI, then come lower, mitigate this, form a new structure down here, and then only break to the upside. I think so many things can happen, but at the end of the day, I'm seeing this play out on the dailies, giving me an indication of what may happen, and I need to wait for that confirmation on the low time frame. Once I start to see that, then it's going to give me a lot more confidence that the daily bias is kind of playing out. So taking what I'm basically seeing on dollar, you can kind of apply that to the rest of the pairs, because obviously from now I'm very bullish on dollar pairs and bearish on dollar cross pairs. So pound JPY, which is strongly correlated with Euro USD, they probably taking a GBP USD correlation. We're looking for potential shorts going forward, and looking at and I think in this video I'll mainly cover the daily, otherwise then it would be a very long video. But and obviously then we'll touch base in the weekly live analysis as to how this is playing out. So I don't think, look, it's not all going to happen open. You're not going to miss labels open. Just to give you an idea of what's going on from that high time frame perspective. JPY is lagging a bit from the dollar index perspective. This started with a reversal. So the sequences are either XAMD, X is either a reversal or continuation, then accumulation, manipulation, distribution, or AMDX, which is accumulation, manipulation, distribution, then a reversal or continuation. We can see this started with a reversal in the month. This week was a much lower sort of momentum. And I've defined that as my accumulation. And I see this next week as accumulation, looking at dollar index and how that's going to play out. So the upside, because long term, we see dollar push higher, so we're going to see this push lower. But I think this is still looking to continue and complete at the steady high value area before we start to see a deeper pullback in line with those dollar moves. So I do still think this has got quite a bit of steam to the upside. Structurally, obviously on the 4-6 hour sort of higher time frames, this is still looking bullish, and I'm sort of anticipating this to continue higher. So still bullish, at least for this week on JPY. I think that just goes back to what I was saying on dollar index. Look, it's still bearish. We haven't seen that shift yet, and continuing on from the lessons learned in this week, I need to wait for structure to show me what I'm forecasting for. I can, sort of translate that into actual trading opportunities. Big difference between forecasting and trading. I'm hearing that more often than not. And I think this week I got caught up in the forecasting elements of it and, the trading part of it side. So bullish on GJ. I'm looking for opportunities from this 4-hour POI. I'll buy. Or even from slow time frame POI idea, which is quite clean, and we could get a reaction from in line with sort of this break structure when we started forming this. So yeah, come down here and on the micro time frames, get that entry confirmation, then I'll be looking for that to continue high. US 30. Similar, we had a continuation at the beginning of the month, starting to slow this week, a lot less momentum, and we've reached these daily highs. I'm going to wait for this to see how it plays out at this level. Again, from 6-4 hour perspective, we're still very bullish, but we have started to shift on the lower time frames here. This has shifted. If we restrict POI and start falling from here, then I think that's going to be a good sign that we are heading lower, and we'll start to see equity sell-off. But yeah, look, we've reached 40,000 for the first time in a while, and yeah, continue higher into price. I think there's resistance here that price will struggle to break. So we'll just keep moving that, but essentially bearish on that, but need the confirmation to start positioning myself. This is at a very extreme low, similarly to dollar index, which is at that extreme low. So looking for this to get higher, I think in alignment with this lines up quite nicely with it. 4 hour bearish, we'll be looking for the shift. We'll still be looking to play structure to the downside. So I'm looking for price to get up into these POIs, then for price to head lower. Or alternatively, a break to the upside. We've then shifted that 4 hour structure, and I can start to look for long setups, more confidently in line with those high time frames. So I think USD's up with now is going to be an interesting pair to keep an eye on. And the last, Euro USD, very much in line with US 30, but obviously inversely correlated to dollar. At the top of that structure, we've pulled back all the way through this internal range liquidity, and I think now we'll be targeting that higher time frame external range liquidity to continue lower, unless obviously break aggressively above the staying level. That would be a major shift of structure. And yeah, look, we never know what's going to happen, but it hasn't happened yet. So it's a break or bounce moment for this. And I think a lot of pairs, sorry, just going back to the daily, just looking at, I didn't plot this, but very much in line with dollar index. We had that accumulation for that first week. We've manipulated higher. Next week, anticipating the distribution lower. And so while that is the forecast, again, consistent theme that I was trying to stick to is wait to validate that. But what is very key here is that we've got a lot of unmitigated fair value gaps below, combined with that 6-hour POI that I think price will be looking to gravitate towards, at least to mitigate those as part of a pullback before we either continue higher or break lower. But on these low time, nothing too clear here that I'll be looking at. So yeah, no interest for me as yet until we get further development. But yeah, I think a lot of opportunity for the rest of the week. And I think key to see how this develops over the week, whether some of these structures are confirmed or, invalidated. But as always, we'll obviously have the live Wednesday. On that note, apologies for this week. Live kind of just got in the way and we weren't able to have that really live this week, but you can be sure that the boy will be back this coming Wednesday. I think the market's developing in a very exciting way, and I'm just looking forward to see how seeing these moves play out. So that is the weekly review number 10. And don't forget, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.